Good morning, everyone. It is Monday, June 13th. It's 9:20 a.m. Eastern Time. And we want to watch what happens here very closely. We are trading right at the lows of Globex, and all four of the indices, two of the four, the ES and the NQ, have traded to lower lows below the May lows. The Dow is not far behind. The Russell is showing some divergence at the moment. The key three words: at the moment. We've had two consecutive down negative 2,000 days in breadth. I can't find, going back a few years, three consecutive down days. We are in an environment very conducive to what is considered to be a crash. I'm not being hyperbolic when I say that. I do think we're either going to crash in here in the next day or two, or you're going to get the mother of all rallies. I think we're going to get the mother of all rallies, regardless of whether or not we get a crash. I just don't know if we get a crash first. There's the way to trade this is the way we trade everything. Expect wide ranges. We're going to have extreme volatility. There are going to be plenty of chances to enter trades that you are comfortable with, but do that. Don't get manic. Don't get panicked. Pick your spots. This week is going to be probably going to be nuts. I think this summer is going to offer extraordinary opportunities. A lot of times in the summer, the thing just goes mind-numbingly boring and narrow ranged. I don't think we're going to see that this summer. I think we're going to have some great trades. You guys, the webinars that we have done over the past couple of months should, the information in those webinars should really, really, really be helpful if you will go back and review those in the coming months. I want to see VIX also. If I put this in the report, if VIX takes out the highs that it made at the May price lows, then that's another sign that we could be in sort of a crash mode here. So buckle up. Happy Monday. Let's see what happens at the opening. Okay, it's 9:50 a.m. and we have a very noisy, not surprising, openings. Here you go. It's just, stuff is all over the place. Breadth is very negative still. It's negative 2,700 and really not showing any life at the moment. Now, what this tells me, a couple of things. This market is so compressed to the downside. It has to rally or crash. I know that might sound ridiculous, but this is compressed to the downside in terms of breadth from Wednesday's close to right now, as I recall seeing in years. Certainly at any time during 2020, it's that compressed to the downside. So there is severe panic in here, but it's also a condition where if this thing starts to rally, it's just going to be fierce. Now, it might stop and reverse on a dime, but we're in that sort of environment. Now, if this isn't helpful to you, I'm just giving you facts, or what I'm giving you my opinion. I'm not giving you facts. I don't know if this is a fact or not. This is just based on my experience and my read. As I've said many times, the important thing you want to do as a trader is to trade your trade setups and to trade things you're comfortable trading. If this is not one of those times, sit it out. There are going to be opportunities. There'll be opportunities this week where things are a little more maybe settled than we have right now. This market, I'm serious, the next 50 handle move in this market is a coin flip. Now, if you want to trade that, really, the best trade is probably to sell it, to sell today's cash low, but your stop has to be today's cash high. Conversely, buy today's cash high, and your stop has to be today's cash low. So basically what that looks like would be this. This is the 5-minute chart. Now this is breadth, but you would be long above here. If I can get everything going here. So you'd be long above here, short below here. Now that's that's $150 a micro contract. If that's not in your trade plan, you don't take that trade. But trying to fine tune this in any other time frame, I think is just puts you in noise that's almost guarantees you'll get shredded. But we're going to get, I mean, breadth continues to show weakness. It's sloping lower. You know, if they, well, there are a lot of things going on. That, from a practical perspective, the best information, the best advice I could give you is if you are going to trade, you want to be long above today's cash high, short below the cash low, with a stop at the other extreme. Maybe that trade doesn't suit you, you don't want to take it, etc. But the reality is what's happening now inside of this range is noise. And breadth is sloping lower rapidly. So that's where we are, guys. But if we were to close breadth negative, even negative 2,000, much less where it is now today, you're in uncharted waters in terms of extremes. A long way to go. It's 9:55, but this is right now. This is a legitimate breadth reading. We've been open long enough that we're negative 2,800. You know, the overwhelming majority of all stocks are open and trading now, and have traded. So, you know, this is capitulation-like. Now, capitulation can take a day or two, and it can take several percent. But this is capitulation-like. What we have been seeing now, Thursday, Friday, and into this morning, is definitely capitulation-like. VIX, by the way, which I'm watching very closely, is still below the May peak, which was about 36 or so. If we go into, now I'm watching it, and it's, hold on, let's see, is it on its high? It's something you want to watch, because if VIX hangs around where it is now and starts increasing, this market will go lower. It will go lower just because of dealer mechanisms requiring dealers to sell futures to stay hedged. Okay, guys, couple things here. I just don't see, you know, if you took the idea about taking the break out of that range, here we are. Now, if you took the break out of the range at this point, you know, I had suggested that your stop would need to be the other end of the extreme. That would be your initial stop. Now your stop probably for short trades can go maybe to here. All right. So there's that in terms of housekeeping, just pointing out ideas. I'm not in this trade. Okay, I'm just following through with trying to display logic. Excuse me. Breadth is negative 2875 as I'm speaking and sloping lower. We are in a capitulation moment. Now, moment meaning period of time. I'm not suggesting this second, but we are in a capitulation condition maybe. VIX, which I'm watching extremely closely, is hovering around its day highs. It's off its day highs, but it's in territory from where it's basically an inflection point. It's in the low 30s. Now, VIX can go a lot higher. And I think a lot of people have been looking for that to happen since the January high. We really haven't had that capitulation moment as measured by this dramatic panic spike in VIX. It may not happen, but it looks like it's on the cusp of it now. VIX is not going to hover around this 30 level for long. There are going to be bets placed. The volatility traders, and they're people that only trade volatility, and I mean not just people, institutions, they'll be putting bets on in this area. So, the ingredients here, the ingredients are here for a crash and continue to support that idea. So just be aware of that. One thing you don't do right now is try to pick the low of this. If you want to be long, then you have to let this market take out some upper level so you know where you're wrong. Now, if you're short and you took this break, good for you. I wouldn't let it go back above 3802, 3803. Okay, 1017, and just to add to something here, all right, we're starting to accelerate lower. This is quite exciting stuff. All right, this is breadth, and I need to update my chart. This was a negative 2000 breadth reading. This was a negative 2000 breadth reading, and we're having another one here. So you can see you can see how extreme breadth is. Now, just for fun, let's go back to March of 2020, which was the last time we had something resembling a market crash. And here you go. Now this was the closest cluster of negative breadth readings where this was a negative 2000, this was a negative 2000. So there were 3 out of 4 days here that were negative 2000, and then you got a ripping rally. This was a negative 2000, this was a negative 2000. We had a day in between here. This was a negative 2000 ripping rally. So you can see that's the pattern even in a crash typically. Something else to make note of here is that we are rapidly reaching a downside extreme. This is a 2-day. I think this is 2-day. Let me see what it is. No, this is 5 days. So it's getting extreme even for the 5-day moving average. The 10-day has now, if we were to close here, and it's too early to make this call, we would be approaching the lows, the 10-day lows made back in January, which were extreme. Then we had higher lows that presaged rallies. Now, if we take this and we look at, this is a 5-day, this is a 4-day, this is a 3-day, and we haven't seen anything like this even, let me get right about here. Now, if we go back to 2000 to 2020. Here you go. So just at right about the same level at its most extreme in 2020. Now you can see from here to here, the market went a lot lower, but also from here to here, if you recall, there were furious one-day and intraday rallies all the way into this low. So that's where we are, guys. We're in crash mode here, but they're going to be furious rallies. I mean, look at this gap. This is some panic type of stuff. This is going to set up some extraordinary opportunity this summer, and probably this week. Okay, VIX is spiking. So to me, you don't want to be thinking long here. You know, we are in. I know you get tired of me saying this, but we're in a crash mode. Don't be a hero here trying to pick the bottom of this thing. Whatever low is put in here, whether it's today, tomorrow, Friday, I don't know, next Monday, it will be tested. And then that will be probably the better intermediate term trade. In the meantime, you know, we're getting super compressed here. So it's just, this is high risk trading. But you can't be long. If you sold up in here, I would just, on principle, I would take something off the table here, because we're not going to go down even in a crash at this rate of change. So I'd be taking something off the table in here. It's just prudent to do that. Okay, it is 11:05 a.m. Eastern time, and none of you are buying this. Don't do that. If you're short, enjoy the ride. I just lower my stop below each pivot. I mean, we are, I keep saying this, we are in crash mode. VIX is making new highs. Don't think it's above, let's see. No, we're starting to press. Let's see. Let me find this. Hold on, let me look at something here quickly. Sorry. No, we're still not at the May highs yet, but we're approaching those. VIX is heading straight higher. So this is an environment where it's sort of a loop that feeds on itself. The higher VIX goes, the more dealer involvement, where the dealers have to sell futures to hedge their positions. And you end up in this loop where selling feeds on itself. And that's where we are. Now, at some point this week, we're going to set up the mother of all buys. Who knows when that will be? We'll try and identify it. But breadth is extraordinarily negative. It's negative 2,900. This comes on the heels of two consecutive negative 2,000 breadth days, which are, I can't find two consecutive negative 2,000 breadth days. This is crash-like behavior. Now, the good news here is that we're not going to go to zero. And there are going to be incredible opportunities, long and short, in the coming weeks. So relax. If you're short this, great. If you're not short it, you don't try to buy it here. There's no evidence of that whatsoever. There's nothing here that suggests this thing's about to turn. If you're playing, well, it's oversold, that's a don't do. So let's, if you're short, great. If you're not short, I wouldn't press shorts here either. I don't know what limit down is. Somebody may want to look that up. That may be where we're heading. Okay, it's 11:20 a.m. And we're getting what you get when you get this extraordinarily compressed, just a straight up vertical rally. You don't fade this either, okay? Now, what I would like to see, one or more of the indices go to a new low and have some sort of divergence, and that's where I would try to buy this. I'm not going to try and sell it because we are so super compressed. Now, if you're short or you got short, you probably should be stopped out. You had a really nice trade. And you know what I would do if I were you, if you caught most of this move, I would go to the gym, do something. For the rest of us that we're not as fortunate as you, personally speaking, what I'll be looking for, I'd love to see one or more of the indices come down into this area, and then you set up this divergence thing. And ideally it would be on higher breadth. Breadth is still extremely negative. And that's what I would be looking for at this point. Now, where this thing stops is just an absolute guess. You know, there's a little pivot high here. That's as good a spot as any. Certainly, if you get back anywhere close to today's cash session open, that's going to be a critical level. Now, that might be a level where you maybe take a look at shorts using the same concept of divergence among the indices, et cetera. Right now, there's just no, there's no edge. You want to be trading at the extremes. And right now, the extremes are today's low, cash low, and today's cash high. The cash high is at about 38.2084, which is this it right here? Yeah, I think this is it. This is today's cash high. Now, obviously, there's a lot of stuff in here too. So this breakdown level might be a place to take a look as well. Okay, it's 11:41 a.m. Eastern time. And this isn't too surprising, frankly. I love the fact that you're watching for that, for the divergence thing. But like everything else, it has to be used in a proper context. And what you're already seeing is that there can be a lag here or there. And the best time to watch for it is at an obvious extreme. For instance, let's just hypothetically say where we are now is a high and we trade back into this range for the next hour and a half. Well, that makes this high more important now than some sort of short-term divergence. And if the market were to come back up here, say at, I don't know, 2 o'clock, then you'd want to be maybe looking for that divergence. Right now, this is the area where I would be looking for a divergence. Now, as I say that, and I notice this is today's cash high. This is today's cash high. This would be another level that I would just absolutely look for some sort of short-term divergence. Now, keep in mind, breadth is still extraordinarily negative. It's negative 2,800. It is sloping higher, but you know, we still have a really negative day working. So, but I do like that you're looking for things like this that are market-based. Things like this are infinitely more important than magic numbers, oscillators, order flow, delta, all this other nonsense that people use. You know, all of that other stuff, whether it's valid or not, has to be executed through the lens of price action. So why not just use price action, period? Okay, it's 12:41 p.m. Eastern time. And a couple of thoughts here. Again, I love the fact that some of you guys are watching this divergence thing among the indices. But it's like everything else. Okay, you have to put a single thing into a context of larger things. For instance, and this is a personal decision, I'm not looking for divergences at a top here to get short. We're so compressed to the downside. I'm more interested in longs as a day trader. So if there are divergences up here and I miss the move back to the lows, okay. But my trade, the trade that I want, is a sharp rally off these lows if they're tested and there are divergences down there, and I can get in a long trade with a comfortable amount of risk. There are divergences between and among the indices all day long, every single day. The ones that matter are the ones that occur at important extremes. Now, that said, we're approaching today's cash highs. So that's a level. So if you choose, that's fine. If you choose to get short up here, if there's a divergence and you get a setup and you have a lower low, you can trigger yourself into a trade. That's great. But again, there is nothing that's magic. This breadth stuff, the relationship among and between the indicators, it all requires context. It requires experience. It requires judgment. You can't rote trade it. I'm not suggesting that you do. I'm just saying, for the benefit of education, that when we're trading the intraday time frame and we're discretionary traders, everything has to be put in a context. That's where so many day traders fail. They want to find something that they can just say, oh, there it is, I'm going to sell it. Oh, there it is, I'm going to buy it. And things don't work that way. Okay, it's what is it? Don't tell me. Hold on, I'll find out. It's 2:40, 2:30. I'm sorry, 2:30 p.m. Eastern. And a couple things here that I think are important. We talk about context, and one of the ideas of context is you want to trade at extremes, and time can be considered an extreme as well. The early part of the day is very noisy. It can be very fruitful, but it's very noisy. We're sort of in the lull, and fittingly, we're right in the middle of today's range. So we're certainly not in an extreme now. So trading in here is more random than not. Again, from a time perspective, the extreme I would consider, around 3:30. If we're down in here around 3:30, then that's probably an idea to be looking for a trade, or if we're up here around 3:30. But right now, and you could sell the break of the structure if you choose, but it's noisy in here. Breadth remains incredibly negative. Frankly, it's off its lows. So if you're looking at breadth on a 5-minute chart or lower, you might say, well, gee, it's off its lows, but it's negative 2,800. I mean, I'll have to go back and look, and I will do that, and we'll talk about it at the close if we close down here. But I don't recall the last time we were negative 2,800. Now you can get much more negative in breadth than that on an absolute basis, and I've seen that, but it's pretty rare. But as I said in the weekend report, and as I mentioned this morning, I couldn't find 3 consecutive days of negative 2,000 closing breadth readings. So we're still in this washout waterfall decline mode. And for that reason, I'm not pressing the short side. Now that may sound counterintuitive if we're going to have some sort of crash, but crashes are low probability events. And if I miss another wide range down day or two. I don't really care, because if I do catch a decent day trade back to the upside, it will probably be the best trade I've had in months, because coming out of this thing, if you're lucky enough to catch it, to have the opportunity to catch it, the rally should be absolutely relentless in terms of at least short term, from a day trade, 2-3 day perspective. To me, the downside is so extreme here that I'm not going to bet that this is the epic something greater than 2020 decline. That's just me. Okay, this is air pocket territory. You see we had this huge spike up. That's an algorithmic driven random stop run. So you have to be. Oh, thank you, Peter. Yes, you nailed that one. Had my mic on the top of my head. Okay, so this was air pocket type of stuff, algorithms. And how do you know in advance? You don't. You can't know in advance, but you have to be aware. Again, it's about trading at extremes, because things are more likely to be real at extremes than not. Now, you can say, well, we were close to the extreme, and I would say, yeah, I agree with you. So, but this is just, maybe most of the institutional positioning today is done. I don't know, but this is, you can see how squirrely it's getting in this area as we come into this last 40 minutes of trade. Breadth remains extremely negative. It's negative 2,800. So that has to be, the trend of the market is definitively down. I'm going to be here through the cash close. We'll talk about this at the cash close and assess at least what has happened today through the cash close at the cash close. Okay, it's 3:33. One thing I don't like about this test at the moment, first of all, everything is making lower lows, by the way, but VIX is also, it hasn't quite traded to a new high, but it's really close. So I'm going to have to see something. I don't see a long trade setup is what I guess I'm to keep it short and simple at the moment. Now, breadth, yeah, there's a divergence in breadth at the moment. We're in this negative gamma situation. And what that basically means is that dealers have to sell contracts the lower this thing goes to hedge. If people are buying puts, dealers are short puts, and they have to sell futures to hedge. That is the short of it. And so, breadth is also at the moment sloping lower. So this could be an epically extreme 3-day stretch in terms of breadth. We'll look at it at the close. Okay, cash market has closed. We have a lot to discuss. We're going to close essentially right on the lows of the day in the cash market. Where the futures close remains to be seen. Where the session close for the futures remains to be seen. But this is another very negative day. Now, there is a lot to discuss here. I'll try and keep it somewhat organized. So let's start. We're looking at the futures contracts today. And you can see one important thing to note is that everything is pretty much in sync. Now, technically, it doesn't look like the Russell is going to close or print to a new low, but I wouldn't hold my breath on that not happening in Globex or tomorrow. We are in a waterfall mini crash capitulation phase. It should be over relative, this particular crash waterfall decline should be over relatively soon. Now, that's time-wise. Price-wise, it's a total guess where this thing ends up. But we are as compressed as I have seen a market in a long time, especially as measured by internals. Let's take a look at that. Now, when I say internals, I'm referring to NYSE data. I use a 10-day moving average of advancing issues, a 5-day moving average of advancing issues. The red is the 10, the green is the 5. This is breadth. This is net advancing minus declining issues. And we have now, we're going to register 3 consecutive days of negative breadth. I can't find 3 consecutive days of negative breadth going back years. The 5-day moving average of, well, that's actually a 3. Let me get it to a 5. Here's the 5-day moving average. And it's pressing levels, well, we saw it here, and this level was pressing levels seen in March 2020. We will visit that in just a minute. I'm going to turn this back into a 3-day just so I can show the 3-day extreme, because that's what's at the moment quite extraordinary. And I do not recall seeing something as negative as this. You can see the 10-day now has taken out all these levels that were formed in here. And you had these divergences that in each case did lead to very sharp rallies. Well, those have all been taken out now. So effectively, let's just get rid of this. You know, the only level left, and this was a level only exceeded if it was exceeded. And we'll go back and look. There are 2 periods I want to take you to look. So this was the level reached back in early January, and so far has yet to be exceeded. It's 10-day moving average advancing issues. Now let's go back to 2020. And we can just scroll right here. Oh, another thing I want to do. So we're down now 1, 2, 3, 4 consecutive days off of the closing high of the 7th. So from here, to today's close, it's about 10%, okay? And that's in 1, 2, 3, 4 trading days. We're down 10%. So far off the high, we're down 22.4%. So half of the decline from January, almost half, not quite half, has come in the last 4 or 5 trading days. So could we go a lot lower? Yeah, we could, but we're not going to go lower at this rate of change. Now let's go back. All right, here is that February, March 2020 crash. And at no time in the move off of this high did we have 3 consecutive days of negative breadth. We had 3 out of 4, and that happened twice. And each of those led to extremely sharp rallies. For instance, the rally here, this carried 9%. This was a one-day wonder rally, but it carried 9.5%. So that's the type of, and that's what we're seeing now. It's a similar price breadth profile or signature where you get these extreme compressed downside conditions that lead to these sharp rallies that immediately fail. And that's sort of where we are. But another thing I want to point out is that the market, this market was the market that we're presently in now, was very similar to the kickoff to this decline. Once the kickoff was over, the market began to become very two-sided, intraday as well as day-to-day. We haven't had that yet. You know, one could make an argument that, you know, this is not an early phase decline. This was the kickoff to the downside here back in January. And this leg was pretty relentless to the downside, but this is even outdoing that. It's about as one-sided a trade as the stock index futures get, or the stock indices get. Now, there's another period that I want to take you to. And that is back in 2018 into Christmas Eve, or the day after Christmas. And I remember this vividly because I was in Tampa visiting my oldest daughter at the time, and I was trading, and I traded on this day actually. But anyway, I digress. You can see the decline here off of this high, the high of the 7th into this low on the 24th was relentless, and it was down about 13%. You can also see here, this is the 10-day moving average of advancing issues, and this is where it was then. Now we're above that now by a little bit, but we're also well below in terms of a 3-day. And you can also see there was only one day in here in this period that we had a negative 2,000 breadth reading, and that was, this isn't going to be exact, but it's going to be close, right here. So what happens next? I don't know, but we are in a crash environment. And I don't mean to be, I'm not saying that expecting you to, or wanting you to panic. It's not, I'm not trying to use hyperbole in here. But this is a crash type of environment. Now, the good news is, as I said before, time-wise, we should be close to at least some sort of short-term low. Now, if you think about it, we have stuff this week that would suggest that could be a catalyst for that final spike, and that is the Fed announcement on raising rates on Wednesday, and then we have a big option expiration on Friday. Another thing to consider, and I put this in the report this weekend, is this. This is VIX and average true range. Now, average true range is not quite up to what it was back about a month ago, but close. And VIX today, you can see it's flirting with trying to take this level out right here. And it's at a point now where, again, this is sort of an inflection point, this mid-30s level. There are people and institutions in particular out there that do nothing that trade volatility. So it feeds on itself. You know, volatility is not going to hang around this level. You're going to see a big spike like this, like we had in March 2020, or you're going to see the market very, very soon bottom out, and we're going to get a furious rally. Now, you really don't have to know which it's going to be. If you are a trader and you understand, if you have a trade plan that is valid, all you need to know is this market, the ranges are likely to be wide, the volatility is likely to hold up, for a while, and there will be many opportunities on both sides of this market. Now, personally, as a trader, if we were to gap down tomorrow, there's no way I can sell this market. It's too deep in the hole. I'm not suggesting you shouldn't. I'm sharing my experience with you. I would much rather, as a day trader, be looking for the long trade. And we talk about the setups. We've had webinars over the past 2 months, very specifically that highlight what you look for when you want to go long, what you look for when you want to go short. Those things have not been, are still in effect. The increase in volatility and the fact that we're in some sort of a crash mode here does not supersede any of that. As a matter of fact, all of the things in those 3 webinars, if you guys will go back and review those, that's all you need to know to trade this market. I'm just giving you analysis, my opinion on where this market is. But I do think we are in a waterfall decline, washout phase, and it's fun. This is going to be a week for the ages. I really believe that. You guys have a wonderful evening, and I'll see you in the morning.